that should look like the banner you clicked on to register, as well as it has our StockTwits address if you're interested in becoming friends of ours, as well as our Twitter address if you're interested in becoming Twitter friends of ours. Then obviously we have our website there. Give me 2 seconds. I got some little glitch here, and then I'm going to be right back with you. Okay, let's get rolling. So, show of hands, how many of you are familiar with the Elliott Wave theory? In general or experts? I'm sure there's some experts in here because obviously you wouldn't be here if you weren't interested in Elliott Wave theory. I see a show of hands that pretty much, it looks like about 20 to 30% at this point. 535, I like it. Intermediate, I like it. All right, so we're going to talk a little bit about basic Elliott Wave, and then we'll get right into, I'm not going to waste your time today because I know why you're here. You're here to look at what we think is going on with these 4 particular cryptocurrencies as it relates to Elliott Wave. So my name is James. I am an Elliott Wave analyst with Elliott Wave Forecast, elliottwave-forecast.com. I've been practicing Elliott Wave since 2003 or 4. I started off in Forex and moved up through, I guess, the ranks or whatever you want to call it in the financial world. I've traded my own fund. I've been a CTA. I've been a hospitality analyst. I've ran restaurants. I've done a lot of things. Now I'm working back with my friends. I helped a long time ago get this off the ground with elliottwaveforecast.com, and they've blown it up, obviously. So what we're going to do here today is just look at 4 different popular cryptocurrencies and their Elliott Wave perspective as it relates to how we do things. And that's it, and then I'll try to leave some room at the end for questions or anything else you guys want to look at, okay? So first things first. So who we are. I wrote this, so I'm going to read it. If that's cool with you guys. Elliott Wave Forecast is a team of technical analysts with varied backgrounds in finance and science. Most of us come from engineering or science. I actually have a chemistry degree and a minor in finance, which is weird, I know, but it is what it is. And has been in business since 2005. After many years of applying Elliott Wave principle to trading, we actually all at some point, some of us still do, well, we don't run funds anymore, but we all still trade. And our founder, including me, we used to run money. So we used the Elliott Wave principle exclusively back then, and we found it becoming increasingly more subjective, creating what we thought were false patterns within verified rules of classical Elliott Wave analysis. And ever since really the rise of the machine trading, or the quants, or whatever you want to call them, we've seen that fact to be exacerbated. And while while Elliott Wave theory, we still believe in it and it has its merits, there's a new code and we think that is the behavior of the markets. I'm not saying this is some sort of, I'm not trying to poo-poo Elliott Wave at all. Elliott Wave is in our name for a reason. We believe in it. But we found some significant tools to use with it that help you with your trading and help keep us on the right side. So quite simply, a trader needs more tools to combine with the classical tenets that R.N. Elliott modeled back in the 1930s. Rather than give up on the principle, over 10,000 hours were spent with these tools to help model an analytical process that includes not only Elliott Wave theory, but also a proprietary system we use to determine swing and sequence, cycle correlation, as well as trading with right side. All right, good with that? So what we're going to cover today was going to cover a little bit of our system and methodology. We're not going to give you all the secret sauce. We people that pay us monthly, thousands of people that pay us monthly for that information. So we're not going to give you, everything, but we are going to look at a little bit of the differences between us and classical Elliott, cryptocurrencies and the U.S. dollar, which is going to be really the main point that we're going to cover today, particularly as it relates to the king, Bitcoin. So Bitcoin versus the dollar. Elliott Wave Analysis of the 4 major cryptocurrencies that you signed up for, right? So that's why you're here. We're going to make sure we get into that. And we'll look at a couple of trading opportunities based on some levels. All right, so our system and methodology. So I saw a bunch of hands go up that says they know, the basics of Elliott Wave. So I'm not going to try to get into, I could get into a 3 or 4 hour webinar really talking about Elliott Wave theory and all the tenets and all the idiosyncrasies and esoterics that come with Elliott Wave theory, right? But basically we want to talk about, first we want to talk about some of the tenets that are still critical today before we get in really to the meat of this presentation. So what Elliott did back, almost 100 years ago, hard to believe, 80 years ago, is he identified that there's similar patterns that can be found within bigger patterns. Okay, so this fractal nature that he found within the market, these repetitive patterns, right, coupled with some Fibonacci relationships, gave a trader a level of confidence, a level of anticipation or prediction when searching or identifying, let me say it that way, trading opportunities with solid risk rewards. What it really did to really hone in on the essence, and what I really love about Elliott Wave is it gave you a process, right? It gives you a sense of where I'm wrong, when I'm right, when to expect to take profits, when to reevaluate your whole, quote unquote wave count. And it's rule-based, right? So many things I see today, especially in the trading world, are very much emotional driven, very much I'll try to be nice. Very much whatever Twitter says to do, but nobody really has, I want to say nobody, but very few, especially new traders, really have a process. And, back when I got started in trading, one of the worst things I ever did, and you're gonna think I'm crazy for saying this, was make a lot of money at the beginning. And I made, in terms of percentages, I thought that I couldn't lose right after it. So I didn't really have a system though. I just got lucky, right? But after losing pretty much everything I made, I had to look for a system. I had to look for a process. And luckily enough, I came up on the Elliott Wave theory. Read all the classical books, as you know. The people who wrote them, they don't need any more accolades at this point. But we are looking but I did find value in that. And I go back to that point I made when we first introduced, this this presentation, that we were the classical Elliott Wave traders, right? You'd see 5 waves up, and you're buying the next 3 down. You'd see, you'd see a larger fractal complete, and you're selling the, looking for the 3 wave down. And oftentimes we'd see ourselves getting run over by the market because we weren't seeing a lot of times the bigger picture. And we thought that there was a better way. And I'm not saying that ours is the only way by any means, but it is a valuable tool, and I think you'll find it helpful for you if you come into our little world. Now, going back to the kind of the beginning, in Elliott's original model, which is still the case today, prices alternate between what's known as motive phase or motive sequence and corrective sequence, right? So I'm speaking to the choir, a lot of you, so you're going to have to bear with me while I get through some of this, okay? It is a lot easier for me to draw it out, so I'm going to try to open up my e-signal and kind of show you a little bit here in terms of a picture, because I learn and I see better with pictures. I guess that's the my IQ level, if you will. But I think pictures say a lot more than I can say, and it's always been the case. So give me just a second. I'm going to pull over my screen here, and we're going to be able to draw on it. All right, so we're just going to use this. It's just kind of a blank space, all right? All right, so in terms of Elliott Wave, so the basic structure is from a 0 point. We're just going to put it back like this. You've got progress, right? And Elliott said there are 3 waves of progress and 2 waves of what's known as a regression, okay? Or in motive sense, impulsivity, all right, or correction, all right? So it's either a motive wave or corrective wave. And this larger, there's a larger sequence going on in terms of mode, okay? So these 5 waves up that I've got drawn here represent the first swing in a much larger 5-wave sequence, right? I'm telling a lot of you something you already know, so you have to bear with me, right? And this actually should look very similar to what we have here. So this 5-wave sequence now makes a larger degree wave sequence, and so on and so forth. So we've noticed a couple of things, and I'm going to get into what we do. All right, so we've noticed a couple of things that I want to share with you before I get into the charts. We've noticed that regardless of what the count is, number one, that once you have this 7th swing, all right, you will get another swing, regardless of if it's a WXY, regardless if it's an ABC, regardless if it's a 1, 2, 3, 4, 5, regardless of whatever it is. So we have developed a system around that that says if you have a 7th swing here, you've got what's in this case a bullish sequence versus a slow. And what we normally try to do, and I'm making this very simple, and I'm trying to make this very I'm very cognizant of the time, okay? Because we can go into this in a lot deeper method, but I want to make sure that we keep the time. We've saying that after the 7th swing, that from the low of the 6th swing, you should get at least one more high, okay, in this case, in this bearish and this bullish sequence, okay? So what that means is we've got opportunities to trade any three-wave move back or its derivatives, right? So, and what I mean by derivative is if you're looking at the larger three-wave move, and I'm going to go off a little bit here on the side. A three-wave move can be a simple ABC, right? It could be a double three, right, and a WXY, and it can even be a triple three. So when you're numbering these waves, right, in terms of how many swings you have, you've got 3 here. The correction counts as 1, which is 4, and then the next 3 count as 3. So you've got a 7-swing event here. What we've noticed here, even in the corrections, in this case a downtrend, that after you get this 5th swing, that you should get at least one more swing versus the 6th swing low. So we're using that across the board after we've developed what's known as a bearish or bullish sequence. So in this case, we've got a bullish sequence looking for higher highs from this low. So let's take this out. So we don't know if that's going to happen or not. But from this low, we've created a bullish sequence, and now we're going to look for some relationships as it relates to Fibonacci extensions and at least a measurement of symmetry. So the first swing here was this 5-wave event. What we would do normally is measure a measurement of equality for the next cycle to end at the equal leg, which is, or the measurement of symmetry in this case is right here, and not go above the 1618 extension. And you'll see this a lot in our charts as our blue box, okay? Now, if we break above this high in that manner, we can tend to think that we're normally not in a correction, we're in a wave 3. All right, so that might confuse you right now, but hang on with me. We're going to get to some charts in just a second, some real charts, and look at some sequences and cycles. Okay. All right, back to this. So we're talking about Fibonacci retracements and extension, market correlations, and cycles. So we talked a little bit about those just in that little example. And now we're going to look at what we really came here for. So we're of the opinion that the crypto world is beholden to the US dollar. So while the US dollar, we believe, is in an incomplete sequence, and I'm going to show you that in just a second, we don't think that you're going to get an opposite move. Let me back up. While the US dollar is in an incomplete sequence from the highs we made back in all the way back in February of 2018, we think that we're going to see further crypto weakness, okay? I'm not saying it's going to zero. I'm not saying it's going away. I'm not of that camp. I think it's going to be around for a long time. And in fact, I think it could possibly go to new highs, okay? So I'm just going to put that out there so I know that so people know that I'm not here to bash cryptocurrencies, okay? But until we see in our world, until we see the dollar, okay, bullish cycle end, then we don't think that we're going to see the cryptos get strong. All right, so that's one of the things we wanted to cover today. We're going to look at that in just a second on the chart and measure and map those waves. Any questions you have, put them in the queue. I will get to them at the end. There's a couple questions coming in, but go ahead and put those in, and I'll get to them at the end. Okay, so let me back up again. So the idea that the correlation analysis between Bitcoin and the dollar index, in this case, what you're seeing here, we have a dollar index bullish sequence, and I just showed you how we derive that bullish sequence in that little example that we showed with the blue lines. Okay, it still has an extent. We still think it has a bullish sequence from that February 2018 low. Okay, here, and Bitcoin still has a chance to extend to one more low. All right, so as the driver of this world that we're looking to explore here, this is our main theme, our main process, all right? I guess macro view of this world. So strong dollar in DXY or USDX, however you want to look at it, should equal some weakness in Bitcoin. And then the inverse correlation from the pivot going the other way, okay? All right, so you can see here on this chart that you had them trading together, right? So Bitcoin's going down, the dollar's going down, really until you get to this 2018 cycle that we had back in February. And they really started to diverge once we got towards the end of last quarter, okay? So the dollar takes off, creates the bullish sequence that we are now incomplete against this low that I just showed you that example, you know, in that 6 swing here. So we've got 1, 2, 3, 4, 5, 6, 7 swings. We need one more. We need to finish the cycle from this low, which is why we're projecting one more low, okay, as it relates to Bitcoin. One more low being below, depending upon whatever house you use or feed you use, 3122, okay? How far it can go down, we'll get to that in just a second, okay? All right, so hopefully you're still with me. Hopefully you're still with me. I'm going to put in the, I guess, global chat here. I don't guess it'll be in the handouts, but I'll send it to everybody. A couple different links here to some education that we have on our website that's free. All this is free today. You didn't have to give a credit card or anything. So I'll give you some free information about some education, some things you can look up and do some further exploration on your own if you're curious, okay? But I think this is going to be valuable. All right, so now we're going to get into not only that chart I just showed you, but the Elliott Wave analysis of these 4 different major cryptocurrencies. All right, so here's some of the trading opportunities I think we have. So right now, I like Ethereum short underneath 170. All right, and it's an aggressive short while under 140.70. And it depends on which feed you're using or which Coinbase or whatever it may be, Kraken, whatever feed you're using. Targets are below 83. We'll look at that. That coincides with what we're looking for really in Bitcoin to some extent. Dash is an aggressive short while we're under 96.65. Target is 46. And then Ripple, XRPUSD, is we're looking to be aggressive underneath 32 for a target, ideally 1752, but really just to get below 28, okay? So we're going to look at all those in just a second. We're going to go through about 18 different charts, okay? So that's what I really want to get to in the short amount of time we've got. Litecoin is, honestly, it's the only one I think is bottomed. All right, so we do think that Litecoin is bottom versus the 2254 low, and I'm going to show you an alternative low that it could be what's known as nesting against in just a second, okay? All right, so that's what we're looking for in terms of trading opportunities in those four currencies. And we don't, the only one we trade in our live trading rooms is Bitcoin. So we won't really talk about any specific trades in that, but we'll actually look at a couple of charts of Bitcoin as well, okay? All right. Let's get to some charts. So we use a couple different mediums to display charts. We like the trading view because it's cloud-based. You can save your charts. Anybody can update them. That's part of our group, of course. And, you know, we all see them as soon as that happens. I know there's a bunch of other cloud-based charting software packages. MotiveWave comes to mind, so on and so forth. But we like to use this one. All right, so we're going to start first with Ethereum. So here's our weekly view. What does that look like a chart of? I mean, it's basically the same chart you're going to see with the other major in our world, which I think is Bitcoin. Okay, so unless you're looking at this on a log scale, this appears to be 5-wave complete, right? And we've tentatively got it labeled A. Could it be a 1? Absolutely. You know, I'm just going with the minimum here. So we're looking for, obviously, the low to hold, starting at 0 or 11 cents or wherever it started, and trying to find a bottom. So as I said before, we're not saying Bitcoin or any of these cryptocurrencies are going away, but we are looking for the next move of significance to be higher. All right, this is the highest time frame we look at. So we take the highest time frame and start drilling down into every single time frame we cover, which is from a weekly, daily, 4-hour, and 1-hour perspective, to try to relate times when there's or chances when there's times to trade when 2 or more time frames agree in scope and nature and count and sequence and cycle. Okay, so regardless of this count, whether we're right or whether another Elliott house is right, my concern here is figuring out where the bottom of this thing could be from the February highs we just talked about with Bitcoin. Okay, so with that said, we go back to that chart. Okay, and we see a bearish sequence in Bitcoin using those same rules that we talked about before. After this low we made right here. Okay, so we go all the way back to that sequence high. So from May of 2018, we've got a bear sequence, looking for that bear sequence to complete. You're going to see in a second when I pull up the charts that we think we got one more low, whether it pushes higher from here back above 42.37 and rolls over, or whether it rolls under while under 41.90. Okay, doesn't really matter. We are looking for one more push to the downside in correlation with another push to the upside in the dollar index, or the dollar in general, before we find a bottom in Bitcoin and a top in the dollar. And then that's when you really want to look at, we think, investing, not trading, investing in Bitcoin. Okay, so that's a difference. Okay, what are we going to get at the bottom? Well, looking back at your Ethereum, we should at least get a 3-wave reaction back to the upside. against the high we made back in December and January of 2017, 2018. All right, so that's minimum. So when we start buying, we're looking for at least a correction of this cycle that we made, to these lows that we're experiencing now. If we continue to drill down, this is our 4-hour view. It's on an 8-hour chart, right? Let me go to the daily first. Excuse me. So from that A wave high or 1, whatever you want to label it, all right? It's an A or 1. Impulsive wave to the upside, crash to the downside. We contend that it is in a zigzag, and it's got an expanded or extended wave C. I could very easily do a lot of, this is the subjectivity of Elliott Wave. I could do a lot of things. The A could be here, right? The B could be here. Regardless, we created a sequence in Ethereum the same as we did with Bitcoin that I just showed you. In this case, against the May 8 of 2018 high. So until this sequence is complete, we're looking lower. Now, if I continue to drill down, at that wave 3 low that we just showed you on the daily, okay, this low here, we're labeling basically a simple ABC correction up to the highs we made back in February of this year. All right. While we're underneath that, we like selling, as I talked about. This is the 170 high I was saying. We like being aggressive to the downside for one more low below 83. So target is just 83. Right? Now, how do we get into trades? So there's a couple different things we look for when we were trying to get in trades. So number one, excuse me, just one second. Number one, we like to buy or sell at the extreme. So what I mean by that is once we have an invalidation level that we're trying to play against, we want to buy or sell, in this case sell, against a measured extreme. So you'll see that show up a lot of times with our blue boxes where sometimes you might not have a right side stamp or a bear sequence in this case, but you'll see a blue box where we feel that there should be some sort of reactionary event. Whether it's an all-out turn or not, it remains to be seen, as is always the case, because we can't tell the future. But 90% of the time, you're going to get a reaction in your favor. And by favor, I mean by the same direction of the last actionary wave. In this case, the downside. So if we measure this, what we'd be looking for is a measurement of equality of 1-to-1 between the wave A, B, and C. And you can see we were right to that in this case, where you would see our typical blue box show up, looking to short anywhere between 148.22 and stop above here. We like, use the 1618 as the stop area, and then we would look to confirm once we got back, number one, below the March 19th low, for in the process of validating this trade right now. Okay. And further validation once we get below the wave 1. Okay. So that's one setup. Now these didn't snap to the highs, so let me see if that got exactly what we were looking for. because you're going to say, James, you know, you measured this, but it only went to 147.50, you know, and I missed out, right? It happens. So a lot of times you'll see a truncation in the third swing, okay, between the 618 extension and the 764. We've noticed that as well. All right, so we did get that area, but that would not be your extreme area we'd be looking to short in this particular example. All right, so we're going to take that back out. I'm going to try to get you the highs and lows so we can see if this worked out. And this is, I'm doing this on the fly. This is nothing I prepared you like I'm trying to get you or anything. So that low was 125.88. There we go. And then that one was 135. So it just came up short. So what we're looking for now is a secondary reaction underneath this high, since it didn't actually trigger us. So that would take us, you know, under 147.50. We're looking for a measurement on the smaller time frame. So we keep going down, right? So here's your 147.50. We've confirmed new lows yesterday. All right, so we're starting to develop a small bearish sequence from this high we've had on this March 17th, excuse me. So what we're tracking right now for us personally is a three-wave move back to the upside underneath 147.50 to be able to short this at some sort of extreme. Aggressively, in terms of the count, we stay underneath 140, which is this high right here. But for now, until this wave one is broken here at 125, 88 or so, we are looking for it to correct and then roll back over. So that's one setup. Target on this is just a print below the wave one on the larger time frame. I'm sorry, it's wave three at 83. But if we have indeed made a wave four here, I'm going to show you a little extension we like in wave fours versus wave five. So if I take an inverse extension between the length of wave four, project that from the bottom of wave five, wave three, it doesn't quite work out because it takes us below zero. So normally we'd be looking for 1236 to 1618, and that's not going to work because it's saying this thing's going away, and we're not saying that. So now we're looking to measure the internals, okay, between the wave 4 and 5. So what I'd be looking for here is a 1618 times the length of 1 projected from the top of 2. So that would take us to 76.92. So this is our first target area we're looking for below, with a print below 83. And then if we get anything extra after that, so be it. So that's quite a move from where we are right now. And that's, you know, in relative percentage terms, it's a gargantuan move. Right? So that is that's your Ethereum. That's how we're looking at that right now. All right, moving on. And I'm going to get through these and I'll get to your questions, okay? We're running out of time. ran a little bit over, or we got late, started a little bit late. Okay, so DASH dash, we're looking pretty much the same cycle here from its April high. Okay, so pretty much the same as we just looked at with Ethereum. We're looking lower. Continue to drill down. Here's your subwave analysis. We do think we made a wave 4 high on this intermediate degree, which is, our nomenclature, not necessarily anybody else's. From the December highs, we are looking lower at this point towards the target area. Now, this is one of those 1236 to 1618 extension. Okay, so the length of wave 4 projected from the bottom of wave 3, that gives us that target area, 4612 to the 27, basically 50 area. So in the smaller time frames, aggressively, we are looking to sell. Let me go down one more. Wrong way, James. While underneath this 96.89 high, okay, we're starting to see a bear sequence develop. It is not confirmed yet, so we're going to drill down a little bit further. Spread this out a little bit. And you can see right now all we have are 5 swings to the downside. So what we need to get aggressive with is a 6 and a 7. Then we'll create a bear sequence, right? We'll be able to sell the next 3 or 7 swings back up. And I say 7 because of that double scenario I showed you at the very beginning as a derivative of a 3-wave event. Okay, so while underneath this high from March 18th of 2019, just recently within the last few days, we like selling this towards 46, so a test of 46. All right, let's go to Ripple next. I want to try to get all the way through this so I can get to Bitcoin, spend some time on it. All right, so XRP, we like that one lower as well. So a lot of these look the same. So it's basically a mirror image of why, I think Bitcoin and Ethereum are ruling this world. Those are the drivers. You're seeing a lot of similar structures on the higher time frame. So daily, continue to look lower. Right now we've got a black stamp, and that'll mean something in a second when I explain it. Red stamp right side is down, black stamp it just means it's turning down. There's really nothing to do there. So we don't really have a confirmed sequence in this one yet on the higher time frames. But we have, it looks like we got it today. So on the lower time frame. So we appear to have, well, almost. That's your 5th swing down. We need one more push to the downside, but we can start to be aggressive with this one. While beneath 32, we're looking to sell any 3 waves up against that to target at least 1752, as we've already hit the minimum objective by printing below 28. So I think there's one more swing to the downside here, possibly. Okay, so that one, we set this up last night, and that happened today. That was when we were going over this presentation. So it's quite possible it's done there, but so we need to be a little bit careful. But we still like it lower while underneath the March 20th high. Okay. Litecoin. This is contrarian. Let me say that. Hi, Anthony. Yeah, we'll record it for you. We're recording it for you. All right, so Litecoin, this is the contrarian. We do think we have made a bottom here. We're aggressively calling a bottom from December's low. So the structure, we believe, is at least a three-wave move to the upside from the all-time lows, and we've just made the second wave down. Whether this is an A, whether it's a B, whether it's a 1, whether it's a 2, it's immaterial. We are just looking for another minimal push up above December of 2017 high, okay? As you know, we continue to drill down. So what we're starting to see at this point is the first impulse move to the upside, starting to confirm this bottom. We need to see one more swing to produce a bullish sequence on this daily time frame, analogous to what I showed you at the beginning. And then we're taking an aggressive nature here off the lows from December 7th, 2018 again, in what we feel is a nest. So we talked a little bit about that fractal nature of the Elliott Wave principle in the beginning, and we could spend a lot of time on it. We don't have a lot of time to spend on it. But this appears to be 1, 2, and then quite possibly, let me do this. This could be your 1 here, and this could be the next degree 1 here, okay? All right, so that is an alternative scenario that we've got. Somebody wanted to look at alts, so that's one of the alts we have. That is a 1, 2, 1, 2 scenario. For now, we're trying to be conservative as we're looking for a bullish sequence to develop from this low, and we don't have it yet. Right now, we only have 5 swings. So we need, at this point, 6, and then we are buyers on the next 3 to 7 swings lower while that hypothetical low holds. Classical Elliott Wave would say that we're buying on the next 3 down, all right? And we contend that is the case as well in this particular instrument, excuse me. So we like buying versus this 2254 low. And if you're extremely aggressive and you like that scenario I talked to you about with the nesting, then it will not go below 29.77. You can see this is the largest separation that we've had between these two swings, from the lows to this wave 1, and then what we're labeling is the top of the 5th wave of this entire cycle. But it's quite possible that this started a new cycle in a lower degree, and then we're really about to push up. So that's the alternative. It's extremely bullish. I like to stay a little bit more conservative, particularly with what we're seeing across the board in the crypto world with everything I just showed you from the USD needing another turn to the upside to finish this bullish sequence, which should push Bitcoin down one more time, and then all the larger time frame charts I showed you between Dash Ripple and Ethereum. All right, we continue to drill down. Here's your 1 hour chart. I've got a measurement right now that we, if you want to be aggressive, you could buy this 56.57 to 52.85. This is your blue box. We expect a reaction. I don't think it's going to hold. We're looking for a deeper correction. So one of the things you can do when you've got a 5-wave event to the upside is you can start measuring the Fibonacci retracement areas. And we would expect at least a move, especially in a wave 2, back towards the 50% of the entire rise, which takes us towards 53, call it 30, or 43.30, excuse me. And quite often you get a push all the way back down towards the 61.8% Fibonacci level, which is at 38.35 for this particular instrument. All right, so recap a little bit here. We expect a reaction here, but I think it's going to fail below the 64. Let me get you the exacts. 64.20 high, and then we're going to roll over. This is a bit Finex feed, so could be different with your particular price feeds. All right. We already looked at that. It was a daily, same thing as a weekly. All right. I'm sorry. This is the alternative view. If Litecoin is going to kind of play along with everything else, we really just made a wave 4 high recently, and we're pushing down one more time. I don't think that. I mean, this is an alternative view. The only reason I present this is trying to be correlated between the cryptos. Okay. All right. So now on to, I want to show you some Bitcoin charts that we cover every day. Long-term target price for Litecoin, yeah, I'll go back in that. I'll show you that in just a second. All right. While I'm waiting on it to load, I'll go ahead and show you. So long term, I guess go to this one. Long term is a move back above this high, right? That's what we're expecting, 369. Whether or not it makes a new low in Litecoin or not, it remains to be seen. We are expecting that in the major drivers of the currency or the crypto world, particularly Bitcoin. But could it have bottomed here? Yes, absolutely it could have, in everything, right? So long term, you're looking above 369 in this particular instrument. But what I would wait on, if you're that confident in this analysis, I would wait on a sequence to develop, and we would map and measure that every day. We're in the verge of seeing one right now, right? We only have 5 swings up. I don't have a confirmed low yet. It would take another cycle high here, back above 62, back above 62 after a short correction. And then I would say it's on its way. At least, let me say this in terms of minimum, at least a correction from the December 2017 highs to the lows we made December of 2018. So at least a 3-wave correction of this entire move. And then we contend that we're going back above those highs. All right, so we'll see what happens. I don't know what that's going to look like politically or even with regards to the Federal Reserve, but I'm not getting into any fundamentals. I'll just leave it at that. So going to Bitcoin, this is what we show to subscribers every day, and I'm going to give you all 4 time periods. As a freebie. Well, it's all free, but this one's free even more. All right, so now I'm going to start answering some questions. How far down can Bitcoin go? Let me go ahead and go through the whole entire analysis. So we've created a bear sequence from the highs we made back in May of 2018. We've already established that. So what we're contemplating here on the higher time frames is whether or not this is a wave 3 bottom, or whether or not it's the B wave bottom. If it is the bottom, okay, could be. I know some other houses are calling that bottom, but we don't see it yet. So there's two possibilities here. This wave 4 ended here, if we haven't bottomed, or we're pushing out here. We've switched this just today to contend we are pushing higher, back above 4100, 4190 to be exact, towards the 4436 to 5125 area. So this is our blue box. This is an area where you'd be looking to sell. Number one, we got to see it break above 4190. And number two, above 4237 in our feed. Okay, I've got these memorized because I look at them so much. 4237, 4190. And then if we break below 3322, again, our feed, we feel like the downside's on, and then we are back to the idea that the wave 4 ended here. We press down at least one more time, if not two more cycles to the downside. Somewhere between, we feel, would be around 2750 to as low as 1100 from our measurements. So that is some of the downside targets we have. What if we made a low here? Well, we would wait on a sequence to develop because we're going to have a lot of time and a lot of room to buy this thing on the way up. If you do any sort of trend or technical analysis, which is all we do really, this technical analysis, excuse me, you can see that from the highs, every single high has pretty much made a lower low, right? Definition of a downtrend. So until that gets reversed, which we could start that here, right? So this is we're at a critical juncture, which is one of the reasons why we did this video or this webinar today. We think we're at a critical juncture. We think the cryptos are about to wake up. One of the things I'm looking at here in regards to Bitcoin is, a similar self-repeating or repeating structure that we had back, towards the summer of last year until we dropped off and right before everything else dropped, really, right? So we could see that pattern once again, and I think that could be the last low that we see if, and I believe it will, Bitcoin survives and puts in a bottom. I don't think that it's going away. I think that it's going to stay around. I am looking for lower lows, but that doesn't mean that it's doomed, right? So that's pretty much it. On the smaller time frames, we do like selling if it reaches back above here. Number one, it's got to get above, I'm going to say this again, back above 4190, back above 4237. Reaches our area of extreme where we'd like to sell for another low back below 3122. So there's your free trade if we get back above there. All right, so let me get to some questions, and then I'm going to put some links in here for you that I said I would, so you guys can, if you want to do some research on your own, you'll have that. Give me just a second to copy those and paste them, but go ahead and put your questions there. If I haven't covered anything I know there's a lot of questions. I haven't looked through every single one of them, so I think I got the most recent ones, but go ahead and put them in and I'll get to them. That's a good question. Is it possible to have a 5-year overview for cryptos? I know we do for stocks indices. We could probably do that. You talking about in the service? Yeah. So, before I go, I'm not leaving yet. I'm going to put those links in there for you. But, appreciate you guys attending. Hopefully we covered something that was of value today. We cover Bitcoin on a regular basis. In our Group 3, which I'm a part of contributing to, I'm a contributor to Group 3. Group 3 consists of all these stocks and ETFs and Bitcoin. So that is the group that I help with. And we also cover 54 other instruments, right? So it's 78 instruments in total, and we have a free 14-day trial. If you want to try any particular group for 14 days, no risk, then that is there for you. We hope to see you in one of our live trading sessions, and we hope to see you around the service. Now let me get those links for you, as I promised. I'm sorry, I didn't translate it, no, in that. Hi, Justice. Yes, we will make a recording available to, as long as you sent your email in, which I'm sure you did, to be on this. We will put that out. Okay, so let me get you those. Give me 2 seconds here. All right, so this first link is, for not most of you, okay, most of you know how to label charts, but I wanted to share this with you. It shows you how to read and label charts in terms of Elliott Wave. And these are all resources from our website that are free, which I encourage you to check out. I'm going to put a couple more links in here for you as well. The other one is on our wave structures and Fibonacci ratio seminar excerpt from that. So highly encourage you to do that. That will give you more information than I had time to provide today. We also have, my pleasure, Craig. We also have a risk management seminar that I definitely think everybody should watch, because I don't care how right you are on your account. If you don't manage your risk when you're wrong, you will blow up your account. And I've seen it done hundreds of times in the short, 15 years or so I've been trading. See multiple people blow up their account. So risk management is key. And then I'm going to share a couple more links for you as well. That one is for if you want to try one of our group trials. I don't understand the question, Cole. Julius, you should see them there. I sent them in the chat to everyone. Let me know if you don't, and I'll post them some other way. Oh, okay. I haven't looked at that. To be honest with you, I'm just going to be very honest. I haven't looked at that, but I will look at that. That's interesting. So it's more like an index. Julius, did you see those links? Right, but it's relating the entire crypto market in USD, right? Versus USD is what you're saying. Right. Right, yeah. So it's all of that market versus don't see them. Okay. Let me okay, gotcha. Julius, do you have your chat open? Okay. I'm just going to send them directly to you then. My pleasure, man. All right. Ninth wave is just a derivative of it's a derivative of a 5-wave event. Okay, so 5, 9, 13, 17, 21, those are all derivatives of a 5-wave motive sequence, right? Usually an impulse. Let me do this.